what is intangible asset, and on intangible assets, how do you charge amortization? How do you record your intangible asset in the books of account? Are there any conditions, criteria due to which you cannot record intangible asset? Okay, so before we dive into what is, I would say, how do you recognize intangible asset as per IAS 38, let's understand what is intangible asset, what are the definitions given. Whenever any asset satisfies intangible asset definition, then only we can recognize the same. Okay, so let's start. IAS 38. We'll be talking about its definition, recognition criteria. Then how do you recognize in the subsequent time, and how do you recognize afterwards? Okay, subsequent, initial and then subsequent. Goodwill recognition. How do you recognize goodwill in your books of account? Accounting for revaluation model. In case revaluation is done, how do you adjust your fair value? Okay, then inclusions and exclusions under cost model, the way we have learned for property, plant and equipment. There are multiple expenses which are incurred till the date the asset is ready for use. We have capitalized, henceforth we have not capitalized, instead charged to PL. Similarly, here also we'll understand what are the costs that can be included in the cost and what are the costs which will not be included in the cost of the asset. Instead, that particular cost expense should be charged to PL. Next, research and development, very, I would say, a critical one. We'll understand how research and development expenses are taken care. Amortization and impairments. How do you calculate amortization? Talking about impairments, we'll deal with impairments in the next standard in the upcoming video lecture. And then lastly, derecognition criteria. So this is our today's agenda. We'll cover IAS 38 today, that is intangible asset. You must be knowing about intangible asset, the asset which you cannot see, which you cannot touch. It does not have physical presence. Give me a quick thumbs up. Intangible assets are those which does not have physical presence. You cannot touch or see that asset. Correct. But it has value. Since it has value, it has to be shown in books of account. Okay. Let's understand the definition. Intangible asset should be an identifiable, non-monetary asset which is without physical presence, Therefore, it is known as intangible. What does identifiable means? What does non-monetary means? Identifiable simply means that it is separate, it is individual, it has capacity of being bought or sold individually. Okay, identifiable means it is a separate, it has its separate capacity, it has its separate value, and you can easily buy and sell this intangible asset, okay, on its own. Identifiable means a very important definition, that this particular intangible asset which does not have physical presence should have capacity of being separated, transferred, licensed, rented, maybe given as a franchisee license, maybe put it on a rent, you're collecting rent from the same, maybe, okay, it is bought or sold separately. Can be bought or sold separately, individually, or with other related contract. Any related asset, along with it should be sold, or it can be sold and exchanged individually. It arises from contractual and legal rights. Okay, let's take any right that arises due to a contract. Have you ever come across any employer-employee bond? Do you know about employer-employee bond? Tell me yes or no. Have you heard about it? No? Okay. Yes. Okay, good. Whenever an employee joins a company, in order to make sure that the employee is not leaving before 2 years, 3 years, 5 years, then the employer request them that, okay, let's sign a bond. In case if you leave before 2 years, you have to pay 2 lakh rupees to the company as a compensation, because we have spent so much on your training purpose, okay, and we need some time to I would say get a replacement, then we have to again get that staff trained. So it's a lot of cost and it's a lot of to and fro things. So in order to secure, the employer the employer asks that, okay, employee, let's enter into a contract, let's enter into a bond, let's sign a bond, and in case if you leave before 2 years, you have to pay 2 lakh rupees as a compensation. Okay, Bhavik, good? Okay, so here the point is that because of the contract, the party has right, the employer has right to receive economic benefits, correct? Because of the contract, because of the bond, the party has right, the employer has right to collect the benefits from the, I would say, employment of the employee. On the other hand, let's take another example. There is a TV web series being shot, and therefore, while it is being directed and produced, what happens? They sign a contract with the actors and actress. Tell me yes or no. Whenever a web series, a TV serial, daily soap are being recorded, are being produced and directed, they undertake a contract with their actors, okay, with their actresses. And example, it's 100-episode contract, maybe. Please understand. So as per the contract now, the producer, the director has right to receive the services as per the contract from uh, the other party, correct? So if any right arises as per the contract or legal right, example, you have got a deal signed on a legal paper, stamp paper, then because of the legal contract, because of the legal rights, you will have right. Example, as you know, you have right to information. Because of this, you are getting access to any information. You have right to speak, you have right to, I would say, speech. Then you can get, I would say, indulge in any, I would say, if you have any references, you can simply present the same. We are saying that identifiable means it should have a separate individual capacity so that it can be bought and sold, licensed, rented individually, or maybe along with any other asset. Secondly, very importantly, it can arise maybe out of any contract or maybe out of any legal right. Give me a quick thumbs up. Are we good with this first word, identifiable? Good, good, good. Okay. And we know without physical substance. Now the question arises, what is non-monetary? Please understand, monetary means you know the exact value that will be an inflow. Non-monetary means you're not certain about what amount will be an inflow. Let's take an example. Monetary. Example, trade receivable. You have made a credit sale and thereby you exactly know, okay, this is the amount that you will be receiving from trade receivable. Example, you made a credit sale of $100,000 and you will be collecting $100,000 from trade receivable. Let's not, I would say, pay attention to any sort of bad debts right now. So if you made a credit sale and if you have recorded trade receivables, it is completely clear that you will be receiving $100,000 as an inflow. On the other hand, if you talk about inventory, if you talk about property, plant and equipment, example, inventory is recorded at $100, but you are not very sure when it will be actually sold, whether you will be getting $110, $120, $130, or maybe $80, $70. Tell me, do you agree that if inventory is recorded at cost or NRV, whichever is lower, you do not know the exact amount of inflow that the entity will be getting on selling this inventory? Tell me yes or no, do you agree? Correct. Similarly, property, plant and equipment. Example, property, plant and equipment is recorded at fair value or cost model. Example, it is recorded at $10,000. Now you do not know when you will be selling this property, plant and equipment, and on disposal, what will be the exact inflow. In case if you do not know the exact inflow, in case if today you cannot determine the exact inflow related to that particular asset, we'll say it is a non-monetary asset. When you say that it is not determinable that what amount will be an exact inflow by de-recognizing this asset, by transferring this asset, by selling this asset, then we'll say that's a non-monetary asset. So similarly, if we talk about any copyright, patent, okay, example, there is a technology you have created, I would say, created a pen by research and development, and this pen writes 10x. You think and it writes, okay. Do you think that if you use this pen, it would be very easier to, I would say, clear your exam? You will never miss any paper question, correct? You will always be completing 100% of the paper because it is writing 10x. Tell me yes or no. Unless you don't know the answer, tell me yes or no. If you have created a technology that it can write 10x times, your speed has been, I would say, increased by 10. Okay. Then do you agree that you will not miss on any paper? Do you agree? Maybe it's a very special technology, okay, not unique technology, and therefore you as a company have got it patented. You have said that, okay, nobody else should copy this for next 10 years, 20 years, this is under patent. Okay, now it might be possible that you want to sell this patent, it might be possible you do not want to sell this patent. Do you agree that you do not know exact amount of inflow that you'll get from this patent? Tell me yes or no. Do you agree that if you have recorded a patent and got a patent done, then do you agree that on sale you do not know exactly what amount will be an inflow? In this case, we'll say patent is an intangible asset. Okay, it does not have physical presence, but still this technology is very valuable and it is separately identifiable and it is non-monetary because you do not know the exact amount of inflow. Correct? Cannot be touched, cannot be seen. Let's check the monetary and non-monetary difference.